coming up here, I do want to introduce our next guest, turning now to more on the markets. I want to bring in Andres Garcia-Amaya. He's the CEO and founder of Zoe Financial. Andres, it's good to see you this morning. Let's talk about the stimulus. Congress still working on a new round of stimulus as the White House has caved on a number of issues. Bolstered unemployment benefits of $600 a week have now expired. What impact will this have on American businesses?
Oh, it'll have a huge impact, no doubt. If you look at not only the GDP numbers, but discretionary spending, a big driver for things to not fall off a cliff were the fact that people were still receiving a check. So if that goes away, I think there's no doubt we will see an effect not only in economy, but in a lot of companies' earnings and sales.
When do you anticipate that will show up? Because, I mean, somewhat surprisingly to people who have been following this virus, the market continued to march higher last week, despite warnings from the Fed about the economy, the position that it's in, and even some so-so earnings from these tech companies.
Yeah, so the first thing that I would say is that the way that what the market represents versus what it used to has dramatically changed. And what I mean by that is the composition of the markets has changed. So if you go back to 2009, for instance, and you look at the composition of S&P 500, energy stocks accounted for more than 13% of the index. You fast forward to today and they account for less than 3% of the index. Meanwhile, technology stocks used to be shy of 20% of the index, and now they represent 27% of the index. So what does this all mean? It means that markets are not as directly impact on economic fluctuations as much as they used to. They're not immune to it, right? So to your question of, at what point are we going to see it being reflected in the market? I don't think they're immune to it, but ultimately, a lot of these technology companies, if anything, have seen an acceleration of growth for their revenues as a result of what we're seeing with COVID.
Now, of course, we know roughly 20 million Americans, or a number close to that, without a job right now. They likely are not going out and spending in the economy in ways that they were before the pandemic hit. And then on top of that, millions of Americans, tens of millions of Americans could not be able to pay their rent, right, and face foreclosure just within the next month or so. Another blow to the economy. What impact, if any, do you think that will have on the stock market?
Well, this is really where the continuation of fiscal stimulus will be key, right? If in essence we let all of this sunset, there's no doubt. Sure, you might still be able to buy things in Amazon, et cetera. But if you don't have a job, you don't have income, and you can't pay for rent, I don't think buying more things in Amazon is going to be something that we're going to see at the same pace, right? So fiscal stimulus has to be part of the equation. And for that reason, I think it is really important to see what happens in Congress.
Microsoft up almost 3% this morning. It looks like this TikTok deal might go through. Microsoft already near record highs. What would this do for that company, and would this give any confidence to the U.S. market?
So I won't speak directly to valuations, but what I think is interesting is if you look at Microsoft prior acquisitions, they don't necessarily have the best track record, right? Skype and even LinkedIn hasn't necessarily been a home run. So I don't necessarily think that this is a foregone conclusion that this deal allows Microsoft to now compete head on with Facebook with the same ferocity that maybe Google has with YouTube on the other end. Having said that, the fact that Facebook's not buying the only game in town has to be a positive for competitive forces in this space.
Well, speaking of earnings here, Microsoft, of course, reported last week a blowout quarter. TikTok presumably would only strengthen its presence in the social media world because it hasn't had one there. But our producer put together this great full screen. More earnings coming out this week. Those tech names were a boost last week. And this week we've got Beyond Meat. We've got Nikola reporting tomorrow. Roku, Wayfair, Square, they're going to report on Wednesday. Uber, another big name that we're going to be watching. They're reporting on Thursday. Which reports are you paying close attention to?
I think when you look at a company like Square, Uber, you get a pulse for transactional relationships between the consumer and these companies, right, in the overall economy. So I think that will be interesting. But more importantly is the commentary about future quarters, because I think Uber is a bad example because I think they've been negatively impacted in a way that other digital companies have not. But even if you look at the Microsofts or the Googles or the Apples, they did beat their earnings expectations. Having said that, they are starting to talk about future earnings not necessarily being as big of a success as this one, because all we've done is kind of accelerated some of that earnings that we were going to see in future quarters into this one. So look for commentary around future earnings and what they expect, rather than essentially did they beat this quarter.
You know, we also had Disney on that full screen, and Disney, a high-flying stock, near a record high, momentum at its back heading into the pandemic with the launch of Disney Plus that went much better than expected. Its theme parks consistently seen visitors until the pandemic hit. I think some people are really concerned about what cost-cutting measures Disney might have to put in place because of nearly the triple whammy that it's been faced with. It can't produce right now any sort of original content.
Right.
Live sports isn't running. ESPN is going to get dinged for that. And of course, people can't go to the parks and they can't go to the theaters. So nearly every element of Disney's business, sans the news business maybe, is under pressure, no?
Yeah, so if you look at Disney, one of the most amazing things that they have as a business model is that it all starts with their original content. So, when they create Moana, then all of a sudden there's a new ride, and then there's a new musical, and so there's all these flywheels that are driven by their original content. So from that perspective, if they're unable to generate as much original content as they usually do in a cycle, I think there's no doubt that their overall company is going to be affected negatively, not to mention the fact that not everybody wants to go to Disney World right now. Even though you ask my kids, they would go right now, but I don't think a lot of parents would feel comfortable.
The jobs report, of course, on Friday. How much are you focused on that, and do you anticipate that we will actually see jobs growth? We've had some guests on our air say that we could see jobs contraction for the month of July.
Yeah, I think this is very much tied to what we were discussing a little bit earlier with fiscal stimulus, right? I think if anything, we would have probably seen worse job numbers if it wasn't for the fact that there's been some help, right, from the fiscal side. So I don't necessarily expect to see a significant upside. Having said that, jobs tend to be a lagging indicator, right? One of the areas that, or indicators that I'm looking for is more like PMIs, right? They give us kind of a flash take on the economy on this month rather than how the job situation looked in prior months.
I guess the problem is these numbers seem to be so volatile on the jobs front, right? We were actually anticipating job losses in the month of May. We saw job gains, but even the federal government, the Department of Labor, coming out and saying that this isn't exactly an entirely accurate picture of the employment picture because it doesn't count for certain people who are not working, but technically still employed. And so for markets, what would be the best way to digest the jobs numbers that we get on Friday?
You're absolutely right. I think we need to take each number that we get, not just this coming number, but for the next couple months with a grain of salt. There's just so much noise around what is true or what is more traditional versus what we've seen prior to COVID. And that's why I think looking at real-time indicators is a much better gauge at this point than these kind of one number that's supposed to kind of tie it all with a bow, right? So even when I was mentioning about numbers of what Uber rides or restaurant that are still open through Yelp, Yelp reviews, et cetera, that actually tends to give us at this point more real-time data on the pulse of the economy and the ability for it to be open. I do agree that it's going to be very hard to read into these numbers considering how much of a variance there is and how much noise there is around that number.
All right, Andres Garcia-Amaya, CEO and founder of Zoe Financial. A lot for us to watch this week. Thank you.